Hello and welcome to today's great cast. It's the 19th of November. Not quite sure how and why this occurred, but that seems to be the story of the year, to be fair. As usual, you join myself and the goddess of grain herself, Mrs. Angie Setzer, where Angie will be giving us a rapid roundup of the latest pricing flows and market moving news in grain markets. But before she does, a reminder that, well, firstly, apologies that we weren't around. Well, no podcast on Friday, Monday, or Tuesday, and that was all down to me. I apologise for that. I will kick myself up the arse. There's no need for figuring in the back. But also, just a reminder, nicely segue into that this is recorded live, so weird things may happen, and indeed weird things do happen on these calls. I've got two calculators in front of me, which some listeners will know quite why I've got those. But anyway, also nothing discussed on this podcast is trading or investment advice, or if there's any kind of endorsement by myself, Ryan Paisley, Angie Setzer, or indeed PIQ. Angie, how are you? I've missed you.
What's up, homie? I've missed you.
Oh,
It's been hard. I've done these just by myself in the mirror. And it's not, it's not been as fun. So glad to be back. Lots has taken place
yes, quite.
while we were gone. We got Friday morning. Like I was just thinking about this though, honestly, like Friday morning, I'd have phoned it in. So we didn't miss anything because I'd have been like, well, we have to see what the USDA report says today. And I would have been wrong on my assessment. I'd have been like, everyone's talking about big yields and that's wrong. No, the USDA said the big yield number's still there. They patted me on my head and said, that's nice, Angie, go sit down. But yeah, the report wise, we got that on Friday. I had to come in on Monday and have been like, well, probably stuck, really depressing, not much going on, and I'd have been wrong there too. So I'm actually glad we didn't have Friday and Monday, to be honest, because it's best that that's not have been, I would have been wrong both days completely. So here we are. But yeah, just kind of running through, kind of too long didn't read version of what's happened here over the last handful of days. We got the report on Friday from the USDA, bigger yields, smaller bean purchases. You could say the FAS data, the export flash sale data came out, and we saw that, China had really only purchased what we had heard they had purchased, which is always funny to me in these markets, when like we have this big thing where everyone's accepted it as consensus and then it
Right.
comes out and everyone's like, well, let's act surprised again by this. Like that's what took place this last little go around, as we'd only heard that China had purchased like 3 boats or, maybe 5 or 6 up tops, whatever. It wasn't a huge amount of purchases that had been made. And we knew that. We'd seen the cash markets fall off basis this weekend. Like you and I had talked about this, where it's like, okay, yeah, there's, China is not buying like they said they were going to. And I was still like, just be patient. They've got plenty of time. But yeah, Friday's report came out. We didn't reduce yields as much as expected, or even as much as like I had thought that the trade number was still high versus where we would see from the USDA. And I think traders were kind of the same mindset. At least it looked like it going into it, that we were kind of trading a 182-ish type yield and maybe a 51, 52 on beans. And then we got a 186 still and a 53. And so production came in a lot higher than what folks were anticipating. That was kind of the first whammy. Like I said, that flash sales a little negative, more negative than expected. That was the second whammy. So we rode the bus, or rode the elevator.
Rode the bus.
We just basically walked off the cliff on Friday. But then we got in on Monday, and we'd heard over the weekend that the administration was like, no, China's going to buy. We're going to get the finalization of the deal here by Thanksgiving. They have until spring to get these purchases made. This, that, and the other thing, and yeah, Monday morning comes and all of a sudden it's like, well, wait, China bought 2 boats, no, 3 boats, 7 boats, 10 boats, 15 boats. Now we're up to, I think someone said that basically they have 33 cargoes purchased so far from the US and of US soybeans, basically 2.3 million metric tons. And so kind of the thought process now, it appears, is that you're going to see them purchase, around 3 to 4 million metric tons, potentially. This is what I am kind of picking up. You're going to see them make the purchases, but they're going to be, as I was expecting a little bit before, spread out. Why?
Well,
Why would they not be? Right? Like, so you're going to see 3 million metric ton of this go around purchased from the looks of it. They're going to release reserves. So they're going to release beans that they have on hand already in storage. That's going to go into the marketplace. They're relatively comfortable as it is. So that's one thing that's a little problematic, especially for Brazil. And it's been weighing heavily upon their cash prices that they're getting, or at least their basis. But you're going to see them probably release a chunk of reserves and buy US beans to put back into the reserves
Right.
because the US is store better.
So is this just kind of basically like a flip reverse, just a way to kind of get rid of the cheap beans, Brazilian beans that they have in storage? Because as I've learnt before from your good sell, the Brazilian beans sometimes they don't store as well, etc. So it's an excuse for them to clean out the ones that they've got in storage and get them away quicker, because obviously they last far less. Well, I mean, the quality deteriorates a lot quicker in storage. So it's a good opportunity to get rid of those and replace them with higher quality beans that will store for longer.
Well, yeah, or just to revolve stock. Am I
I know what
getting
you're
that
trying to
right?
say. Yeah, I know what you're trying
Turn
to
it
say.
over. You know what I mean? Like all of a sudden, I completely forgot the word.
To be honest, I think we're going for the same word as I was trying for, and then I was like, "Oh, was it?"
I'm like, what word is it? Anyway, whatever. Yeah, like we're turning stock
Refresh
over.
what's in the story.
Refresh it's not like, yeah, when I worked at the pizza place, you know what I mean, like you had to put
Yeah,
the
like new
new
stuff
stuff
at the
in the
back.
back, you
Yeah,
put
we go.
the old stuff in the front, and that's what we're doing. Like you're talking probably beans that are being released that are from 21, 22 crop year. They might be US beans, they might be Argentina beans, they might be Brazil beans, but they're older and they need to go, they need to move, and I I think we have to be careful. I have to be careful how I say this too, just, but I think China has a desire to take more control of the procurement of these purchases, these imports, these things like
Right.
this. And this actually gives them an opportunity to do it to a certain extent, where it's like, wait a minute, Sino, Cofco, we're going to kind of control more of what is coming in from imports, who we're buying from at what values, and then we'll release them to you later on when we know that you need them released. And like, obviously, like you're still going to see the private crushers buy big from Brazil, Argentina, anyone else that's offering cheap, but at the same time, if the government's the one that's always kind of playing the game where they can offer cheaper supplies,
Right.
in different times throughout the year or whatever, it's going to be something to watch. But in any event, no matter what, however you want to slice it, this idea that we went home with on last Friday, that China wasn't going to adhere to their deal, was not accurate. And so the market this week, we've had a really sort of wild ride. We traded up really big yesterday morning, early in the morning. Like I left to take Colton to school and beans were up a dime. It's like a 15-minute drive, got there, checked the markets again, and we were down only up a penny or whatever. And so like we kind of spiked yesterday morning and didn't, it doesn't, to me, that's not a good look on the chart to kind of spike up a dime, 15 cents, and then close down on the day. Obviously, like look at me being a super smart technician. But like, seriously, I think that's a bad look. That's kind of bulking a bit more in the way of some selling, and we're a little out over our skis here. If the Brazil weather turns out decent and all these other things, we're probably going to see carryout stay steady from here. And it'll just be a cash market deal where we see basis firm in places, spreads firm in other places, and things like that. So I truly do feel like we're kind of going to establish a range here and probably sit in it. And that's what we're seeing overall on the soybean side of things. Pretty much the same. Any questions? Anything I should add to
No,
that?
no, I'm loving it so far. To be honest,
Okay,
I'm just
good.
sitting
I'm
here,
glad.
just like looking into the distance, smiling, because it's been a few days since I've heard your voice.
That's what you're about the only one that's excited about that I can tell you, because I listen to me back and I'm just like, golly. Anywho, you've got December corn, just kind of corn got kicked the worst on the report on
Right.
Friday, just simply because we were expecting 184, we were expecting a couple 100 million bushels less at production, and maybe some other adjustments. Like carryout really didn't come in all that different. But the fact that the USDA refuses to adjust a production lower, or doesn't believe that production needs to be adjusted lower, I guess we'll see, what January brings. It just keeps us with carry out, we're kind of at max capacity and demand as it stands currently. Like you really struggle to pencil numbers higher. Like I think I could argue that we could see export sales in corn be up another 100 million, but I think you'd have to cut feed and residual by that much or a little bit more. So like I'm not a demand bear in the sense that I think that they have to cut demand here, because I think I think with ethanol production as it is and exports as they are and feed margins as they are, I think, yeah, we're going to use as much of this stuff that we possibly can. But if we don't see a reduction in production in the January stocks report, we're stuck with a 2 billion bushel carryout, and that gets hard to push a market well above 450 on that news. You know what I
Got
mean?
you. Yeah, yeah.
Um, so we're kind of stuck. Like we just have to see how the cash market trades over the next couple of months. And to be completely honest, I actually prefer that this market not rally. I know that sounds weird. My customers are probably going to be like, boo, this woman. But I want to see what's actually out there and moving. I want to see what cash has to do to generate bushels moving into the pipeline. Like, do
Right.
spreads have to come in? Does basis really firm as we work through December? Or do we have adequate supply flowing into us for the time being? And it just, I feel like it's going to give us a lot more in the way of an indication of the true supply that is out there, as opposed to if we were to shoot to 475, $5 or something like that here right quick. And so we'll see. We'll see kind of what happens here over the next few days. But corn overall, like we're using the hell out of it. We just have more than enough right now is on paper. And so we'll see kind of how that plays out. There's going to be some weather things to watch. Argentina, everyone's really anticipating a massive Argentina crop. There's some indications that they're going to be really hot and dry as we work into the winter. Now, they're saying, that they have plentiful surplus amounts of rain to start the year with, and it'll help them get far into the crop cycle before they have to worry. So we'll see, but that'll be something to keep an eye on because Argentina is going to be what, kind of steps in and keeps us from having and then people are going to be like, she's so crazy, but like a 3.5 on the export side of things. Like, you know what I mean? Like we've never had anything this large from an
Yeah.
export sales program ever, like even close to it. Like I think 2.7, 2.8 billion bushels, the most we've exported. But like we're talking about an export program in corn that's currently 114% ahead of the 5-year average when you look at shipments. Like we are, our sales are up 70 some, like, well, we don't have export sales, but our overall inspections, like we're just seeing this massive jump in corn shipments. And when you look at the overall corn market and the supply available in the world pipeline as we look forward, there really isn't much. And if we run into a situation where Argentina, who we are anticipating to have a big surplus of corn to kind of export into the world market starting April forward, if they don't, and Brazil has an issue with safrinha or whatever, it could get real crazy, especially with China looking at
Right.
probably having 15 to 20 million metric ton of production loss due to the fall weather being poor. So last thing we're really paying attention to, and wheat today you can see doesn't, it was higher and now it's just kind of blah, but I think it's a blah on the Politico headline that just came out. But,
Pause.
we're watching what is going on with Ukraine and Russia. Like we're seeing Ukraine and Russia both target port cities
Yep.
and hit ports and hit civilian ships.
And again, this is something that we mentioned weeks ago, wasn't it? Like it felt like it felt like we were seeing like these kind of unofficial kind of safe zones now being targeted by both sides.
Yes. Yes, and you're seeing a big expansion to the west with where Russia's attacking. Overnight, they're targeting again energy and logistical infrastructure. So they're hitting rail bridges. Like everyone is hitting each other's rail bridges more than anything. Like these are the things that disrupt. Like, and you saw Russia. Shouldn't say that. It looks like it was Russia with the Poland sabotage. And some of these other things. And while we're talking about Poland, they have an epic problem going on with their corn quality as they try to harvest their crop. But there are a lot of things that are going on in the Black Sea that really have my attention. And the narrative does not fit what is going on the ground. Like you saw the Ukraine ag minister come out today and say, oh, well, we're going to increase wheat acres. We're going to have several million hectares more of wheat acres this fall planted. Okay. We're also going to export more. We have the potential to export more. Oh, all right. So let's put that into perspective, honestly, instead of just repeating this crap that they're putting out there. Ukraine so far, like they have a July to June marketing year. And when it comes to wheat exports, anyone will tell you that you really front load, especially in countries like Ukraine, that typically export their surplus production, try to export it relatively quickly because they don't tend to have a ton of storage. You tend to see them ship the bulk of their stuff that needs to go on the front end. You know what I
Right.
mean? Like
Yeah, yeah,
you need
yeah,
to be about half committed on the front end of the marketing year, because then as winter comes and everything else, it gets harder to buy, the quality goes down, yada, yada, yada. Okay, Ukraine right now is almost 2 million metric ton below last year's pace on wheat exports. They've shipped 6.8 million metric ton versus 8.8, I think was 8.6 was where they were at last year at this time. And so to me, for someone to say we're going to ship an extra 2 million metric ton when you're already 2 million metric ton behind, we're talking 80 million bushels here. That's it's a tough hill to climb, especially as you're seeing a
it's a
continued
big ask,
story of
right?
yes, yes, infrastructure being damaged. And so what I'm really struggling with right now, and then I'll stop and I'll get off my soapbox too.
No, no,
Like
no, no, no. We love it. We love you on your soapbox.
so we don't provide context. We just say things. And I think it's
Yeah,
because
do you know what? I see that all the time. It's almost like people are dreading a follow-up question. Do you know what I
yes,
mean?
because they don't know, they can't answer, and that's why they don't want you to ask them. And so like that's my biggest problem currently is we just who cares if it matches with what is actually taking place in front of you? Like your eyes are deceiving you. You just need to read what's on the paper because we're telling you that we have record supplies and we have this blah 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 and that blah blah blah. And so that's my biggest struggle right now is like we continue to say nothing is wrong with Black Sea logistics. We can continue to manage to ship as though nothing has been interrupted. But then with your own eyes, you're seeing that things have been interrupted. Freight costs continue to go up. The offers into the world market remain stagnant. Like all of these signs are there that, it's not as easy as everyone wants it to be. And they're probably not going to see a continuous increase in production capabilities if you're seeing Russia, attack overnight. Like the attack overnight was in far western Ukraine, and it was with hundreds of drones and 50 some missiles and all of these other things. Like to act like this is not impacting food production, I can't wrap my mind around it. And maybe I'm the crazy one, so you guys can tell me that later. But it just it remains something to watch. But with the lack of data that we have, especially the lack of the CFTC data, the commitment of traders numbers and things like that, I do think you're going to see more and more folks who might have come into this market and felt comfortable to invest because of the fundamental stories that we have, feeling uncomfortable just simply because if you buy this thing and in 7 years or whatever, when they get caught up on when we were shut down, like, which seriously, like they're talking, I think the export sales data gets caught up around Christmas, and CFTC is it after the first of the year, I think, or close to it,
Something like
you
that.
know,
Yeah.
which is absolutely ridiculous. If anyone from the administration is listening to this, which I highly doubt, but if you are, what the hell are you doing? Get your heads out of your ass and get the data out to the people.
Well, there's the snippet for today's show.
That's like, what are we doing? But in any event, I think that slows down the interest too. And honestly, I don't think I'm the only one that's starting to slip into holiday mode. So if
Oh,
you're trading
absolutely.
grains, like if you're trading grains right now, just feel comfortable to kind of, I think, get jiggy with the range. There we go. Just embrace the range because I think that's what we're going to really do. I think it's 1110, 1120 to 1160 on January beans, and probably 428, 420 on the low end, to 450-ish, 445 on December corn. And that's about what she wrote, 520 to 550 on wheat, and we'll see what we need to do, but it'll be hard without some big fundamental story to break out of that,
Yeah.
much before the January crop report.
Got you. Well, Angie,
Sorry.
Angie, thank you so, so much for getting on your soapbox because I appreciate it. Listeners, thank you. Thank you so much for tuning in, everyone. We've missed you whilst we've been away. I hope you've missed us. Whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Have a good one, guys.